Hello everyone, welcome to the channel. Today was a very tough day, to be very honestly speaking, because market came down as expected, and um, we discussed that once the market breaks yesterday's low, then we can see a pretty big movement, at least till whatever we discussed from a day's perspective, that it can rally down till 23,150. But market did not move as expected. Market came down and market rallied up, market again came down. So basically, if you see in one day's chart, it formed a dodgy candle. But in this dodgy candle, the important thing to note is market faced rejections from 23,600 and closed almost close to the opening price. Market opened somewhere close to 23,360 and closed somewhere close to 23,400. 40 points difference is where market has closed. So whenever such kind of a dodgy candle happens, what we can expect, if you see the past candles, wherever dodgy candles have been formed, what we can see is if the market opens above the opening price, above the high of the candle, then we can see a rally on the upward direction. See, every time whenever market opened above, we see a rally. In case of green dodgy, I mean, whenever market opened above, we see a rally. Market has to open above the high of today's, meaning if you see here also, market opened above and it formed a rally. This is always obvious when it forms a dodgy candle. The same is true if you see in any kind of historical charts. If the market opens above the high and sustains above the high, we can see a rally. This is how chart works, and chart has a tendency to follow historical patterns. The same is true if market opens below the dodgy, meaning if the market opens somewhere close or below the opening price of today, then we can see a rally to the downward direction. Eventually what will happen is tomorrow market can sweep the low and again form a dodgy candle like this. So what I mean is something like, if the market opens above the opening, above the high price, then we can see a movement till here, come down and then close till here, something like another dodgy which can form. The same can apply on the downward direction also. If the market opens below here, we can see a rally till here and then close above here. So same to same, a dodgy candle is expected tomorrow also. So how do we trade in this kind of a dodgy candle? So the important thing to note is there is change of character obtained in 4 hours, but there was not a rally obtained which was expected, right? There is still a gap which is left untested by the market as part of this gap, which is still not yet tested. So if the market breaks 23,340 again tomorrow, then this move is pretty easily can be obtained. So tomorrow is Sensex expiry. Okay, so make sure that you keep your watch on Sensex also. If Sensex drives down faster, Nifty can drive down even further till here. Okay, because there is a demand from a weekly perspective and also daily perspective which is sitting here somewhere close to 22,400. If Sensex decides to fall, Nifty will fall drastically down. Okay, on the other hand, if Sensex is, there is no movement at all, and if Sensex opens gap up and sustains the gap, meaning if it breaks 23,600 on the upward direction and sustains, then we can see a rally obtained till all the way till 24,000 also. Both these moves can be possible tomorrow, but whatever happens, keep your quantity size small. If you don't keep your quantity size small, and if you are trading in a very very big quantity size, the problem what will happen is the moment you see a big profit on the screen, you tend to close it. So if you have a plan, and if you are having a proper risk management, saying this is my entry, this is my stop loss, this is my target, if you have these three defined, then whatever the lot size you are choosing, you have to stick to either SL or target. That is how your mindset should be. Whatever I am trying to tell you as part of levels, as part of education, is secondary. how you are acting as part of when it comes to real trading, when the chart is running and when the real money is involved when it comes to trading. That is where your emotional and psychological things comes into play. Today I had given a two calls, meaning one on the downward direction. I planned a put position to my members. Also, I gave that particular direction with the stop loss, with the entry, and with the target. And we booked close to 50 points or 60 points in this put position. And I also gave a rally for the upward movement also, but it eventually hit my stop loss and then rallied up. It is okay. It was a break even call position, but it was a profitable put position. If you are interested in such kind of real time market predictions also, please reach out to me. And it's better that you take the course so that you become independent of whomsoever the telegram channels you're following or whomsoever live youtube channels you're following and all. Make sure you learn yourself, you become independent. That is my primary motive. Whatever happens or happened during the day, don't take it to your heart. Tomorrow is a fresh day. Start fresh. All the best. Thank you so much for watching. We'll meet in the next educational video.